Hello guys and welcome back to the channel. So the Q1 Tesla earnings has changed everything, at least for me. So you know the stock market has been crazy, and if you have been investing in the stock market, I'm pretty sure that you're down on your investment, and you should be very lucky if you're not significantly down. If you're up on your investment, please let me know what you're doing and what you're investing in. I want to know in the comments. The point is that for long-term investors, this market is beautiful because you're getting things at crazy discounts if you have the eye and you know how to look at companies and their financials and their fundamentals. And Tesla has always been a stock that has felt, way overvalued. And even though the company is, delivering very much on their plans and the company is doing amazing, the stock price has been hit recently. So naturally, like all of you, I also started asking the question, could Tesla be a buy? And the thing is, I must be honest, I fell asleep on the Tesla story. I wasn't mentally ready to invest in 2019 and I wasn't financially ready. I am now, and Tesla has always felt very expensive to me until I did my math. And this is what I want to show you guys because I got quite shocked about the results. So let's get into it. And by the way, if you like this video, then please make sure you hit the subscribe button so you don't miss any of the new videos. And let's get into it. So this is the stock price of Tesla. And what's really hard with this company is that it has periods when it's doing nothing. Like for example, between 2013 to 2019, for 5 years, or it's almost 6 years, the stock did nothing. And then it 20x no time, and then now it's doing nothing, right? This is very hard because it's kind of the stock's fault, because had it 20x over this 9 years, then people go like, okay, this is a nice growth. But this can really throw you off because it has gone up so much that you're like, oh my God, just a few years ago the stock was $76 and now it's like $800 and even $1,200. And this is why it's so important that you're able to do the math and see what is the actual fundamentals behind the company. And I do believe that when the Q1 earnings came out, I was reading their Q1 earnings report, which I really recommend all of you to read. It really changed everything for me. And I made this table. If you follow the channel, you know that I make these tables for these companies. And it's not a DCF because I believe that it's normal people can't do DCF, and then basically you have to watch other YouTubers and you have to believe in their numbers. What I more believe in is doing a more common sense valuation of a company where I play with their, how their earnings is going to be adjusted, how their, profit margin is going to be, what's their bottom line, and then what is the PE that I think is going to be in 2025 and in 2030. And full disclosure, 100% of my long-term investment portfolio is currently in Palantir, and that deal is so sexy that I'm trying to buy more. But Tesla is a number 2. You're going to see on the list why. And if Tesla falls more, it might become a number 1, and I will have to diversify there a little bit. But this just shows the conviction that I have, right? And what I really like with this type of valuation is that you don't need to be an economic degree, a Harvard business study. You can download this table, which is available on my Patreon, $5 a month, as soon as I manage to get it going. And this is not investment advice, and this is what I think the numbers will be. But what's fantastic with this table is you can make your own assumptions, change the table, and then you can see if you should buy the stock now or not, and if you think it's a good price or not. So here is some basic data about Tesla. Currently today the market cap is about $900 billion. It says on Yahoo Finance that it's trading at a PE of 117. So it currently has a PE to growth ratio of 2.93, which again, by any traditional metrics, is very expensive. Normally you want the PEG ratio to be close to 1. When the Fed is very dovish, then maybe you're okay with having it just a bit below 2. 293 is definitely on the pricier end. Again, PE over 100, definitely. So I very much understand why people can look at this and say, no, Tesla is expensive, until you check their projections. So we all know that Elon Musk has said that they're going to grow 50% per year comfortably. Now, I think he means vehicle deliveries, and we're gonna come back to this, because normally what people would understand on this is that the earnings per share, or their earnings are going to grow 50% per year. Now what's really tricky with Tesla is they are doing amazing on optimizing their factory and disrupting the whole car market. And the moment they turn on full self-driving, their profit margins are going to significantly increase. When they turn on the robotaxi, their profit margins are significantly going to increase. So even if they grow the vehicle deliveries by 50%, because they're continuously making the production more efficient, it can be that they double or triple or quadruple their earnings per share, which I think is that is more likely. I'm pretty sure that they mean that they're going to grow 50% in deliveries. And I got the numbers here from their 2021 bookkeeping. You see that their revenue was 58 billion, almost 54 billion, on which they had a 6.7 billion operating income, which equals to a 12% margin. So again, here is the first thing that is misleading, because when you break it down per quarter, then you can see that their operating margin is steadily increasing. And the 12% is basically the average of their operating margin that was in 2021. But as you can see, the last Q3, Q4, they were way over this 12%. And in Q1, they just blew past and they had a 20% operating margin. So I think that you can very safely assume that their operating margin is going to be like 18, 19, 20%. And this is without the FSD, without the robotaxi. So this is very important, just so you know why I have the numbers that I have. So again, I do believe that I'm counting very safe, because I'm somehow saying that their profit margins are going to get destroyed. Maybe inflation, maybe supply chain issues. I don't know what can happen, but I'm calculating very, very safe. And this is in 2022, right? And then in 2023, I'm saying that they're going to have a margin of 20% and then 22%. And I don't dare to increase this more. Again, if you're a crazy Tesla bull and you say they're going to have software-like margin, then you can count that this will grow up to 30%, which will very significantly increase their operating income, right? And the operating income is what I use to determine their market cap. So then another assumption is that, again, I toned down a little bit what they said, even though this is most probably wrong. I said that let's have them grow at 40% per year. They have a target to produce 20 million per year by 2030. I said, okay, let's tone down their expectations. And if they grow 40%, 40%, 40%, 40%, and then 30, 30, 30%, then they will only quote unquote arrive to 15 million cars in 2030. So here I have a major question, because I'm very sure that Tesla has very good demand right now. They are pretty much pre-sold and selling every car that they're producing without any marketing spent. Now, a big question mark that I have is that once they start, we hit 2025 and 2026, and they start producing 3.5 and 5 million cars, is there enough money and demand in the world that people are buying, because they are not cheap cars? And this is a question mark that I have, and this makes the calculation a bit uncertain for me when it comes to 2028, and 2030. Again, there's work around this, meaning that they might produce a way cheaper car, which they can sell very many of, and I know that this is on their timeline, which would also destroy their margin a little bit. However, I'm not calculating with any robotaxi margin and with any FSD margin. So I feel that the calculation is correct, because I left out a lot of upside and I left out a lot of downside. So they should kind of zero each other out. And yeah, I can totally understand why this company is hard to evaluate, but you gotta try. So then I calculated with how many shares outstanding they have today, which is a little over 1 billion. And then I count with 3% share dilution every year. And this is how their stock price grows. So I'm very interested in 2025. What is the market cap of Tesla going to be? A big question mark, and belief from my part is that they're still going to command a P of 60. The current P that they have is 117, and just to show you how misleading this is, if you annualize the Q1 earnings per share, meaning you just times it by 4, and even though we know that they're going to have a lot of positive effects, right? So this is probably off. But if you just annualize, then you get an $11.44 earning per share. And if the share price is 874, then currently already now we're at a PE of 76. So do you see how much, like if they're growing really fast, then they very fast grow into their PE. And I think a lot of people miss this. So the reason why I think that they're still going to command a 60 PE is because they're still going to be growing very fast. And this is the point where, you know, this calculation lives or dies, because if they only command a 30 PE, their market cap would be 1.3, and that would result in a share price of 1,100 per share, and currently the stock price is at 800, and that's not a very sexy deal, right? However, I can see that if they're still growing at 40% per year, you can't at least have a 60 PE. I mean, Amazon, for example, has been at around the 90 PE, I don't know, for 20 years since it has existed, right? You can play with the numbers, and you know, you can change that, you know, their operating margin becomes a bit less, and you will see that the biggest thing that changes your calculation is what is the P that Tesla is going to command. And I'm gonna go with this 60 number, which would be a PEG ratio of 1.5, because they're still going at 40%. So I believe this is still a conservative measure, and this would result in a share price of $2,332 a share, and a share price in 2030, it would result in a share price of $8,661. Here comes what I really like with my calculation is I have a thing here which tells you if you should invest or not, and the way that you decide is you look at how much return you are okay with per year. So I go for a 30% return per year, and basically it discounts the price of, okay, if I think that in 2025 the stock price is going to be 2,332, then if the stock price is at $816 and I can buy it for that or less, I will have an at least 30% return on the stock. If you are happy with 20%, then you're happy with buying the stock at $1,124. And if the calculation pans out, then you're still, if you have a 10-year time horizon, you can be okay with the 1,600 stock price. And if you want 30%, yeah, then 817 stock price. So when I see this, I'm like, oh my God, I really hope that the market is weak a little bit more. There is, you know, turbulence with his Twitter takeover, and, you know, the market misunderstands Tesla as they have always done, and the price will go below this point, at which point I will use margin or, you know, whatever I have to purchase this stock. Now, I just want to show you your biggest risk in this calculation is their P and growth. And basically the growth will command a high P, and if their growth stops for whatever reason, the P is going to collapse, and this is the biggest risk that you're taking. Now, we know that up to 2025 they're opening factories, you know, they have so much pre-orders. Once they're up in 5 million cars, 7 million cars, that's when I believe they will have to start spending on marketing. It might affect their, you know, operating margin. And there's just one more thing that I want to show you, because as you know, in this calculation, or as you see, we're only talking about their car business. The car business is at the beginning, or, you know, like going up in S-curve, but Tesla is a company, I found this by Dave Lee, that has many S-curves that are in the beginning. So for example, we are somewhere here on the EV S-curve, but we haven't seen anything on the FSD and on the Robotaxi. We haven't really seen the energy scale. And then there is the AI robots, which we don't know anything about. I believe that it's fully discounted from their stock price. So if you're confident enough that they're going to, you know, expand the way I said in the table with the cars, then you basically get Robotaxi, energy, and AI robots 100% for free in the stock. If you feel that the car is risky, but you're very much trust on that the Robotaxi is going to make up for the margin, then you're still getting energy and the AI robots for free. And if you trust that Elon Musk is going to make impossible things possible, like he has done the last 20 years he has been in business, then this stock, my guy, is opportunity of the century. And I can't wait for the market to go a bit lower so I can start buying into this stock below this 816 price. Again, if you're interested in this table, you will find it on Patreon. The link will be in the video if I manage to get it up. If not, I'm sorry for the delay there. And if you have been watching so far, thank you so much, and I will see you in the next video, and do well. Bye bye.